Well, thank you everyone for joining us today. Hope you're staying safe and warm inside. Today we're here to discuss Swiss banking and secure custody together with Milko Hensel, Head of Digital Partnerships at Maerki Baumann, a private bank, a private bank based in Switzerland, as well as Carmi Bogot, VP of Business Development at Tel Aviv-based cybersecurity firm Hub Security. We'll start our webinar with a brief introduction to our speakers, and then I'll hand over the stage to Carmi Bogot and Milko Hensel for their presentations. At the end, we'll also hold a short Q&A to wrap everything up. Actually, Milko won't be doing a presentation today as much as a discussion together with me, but we will start with Carmi. I'm now joined by Milko. Hello, Milko.
Hello, nice to have me.
Yeah, our pleasure. Milko Hensel, if you guys are not aware, is Head of Digital Partnerships at Maerki Baumann. In his role, he is responsible for digitization measures within the bank and for maintaining relations with crypto and fintech companies. Milko also oversees a wide range of tasks from client onboarding to enhancing the bank's technological setup. Prior to this position, he worked for Credit Suisse in Switzerland and Commerce Bank in Germany and various other management consultation firms. He also represents the bank in various working groups of the Association of Swiss Asset and Wealth Management Banks. Welcome, Milko. We're so happy that we could have you with us here today.
Thank you very much.
And we're also joined here by Carmi Bogot, Vice President of Business Development at Hub Security. Welcome, Carmi.
Hi, pleasure to be here.
Carmi holds a master's in computer science and a bachelor's in economics from the Hebrew University. Carmi was the NDS Vice President of Business Development for over 12 years and has played a key role in helping the global security company penetrate new markets worldwide. Today, he is the Vice President of Business Development at Hub Security, as I've said, and has a long successful track record of helping companies introduce products and technologies to markets. He's also somewhat of a security expert himself, so we're happy that we could have him here today as part of the discussion.
Thank you.
So I'll first hand over the stage to Carmi, who will share with us some of his thoughts and insights on why security is so critical when it comes to handling cryptocurrency and crypto custody assets. And then we'll have a brief discussion with Milko on Swiss banking and crypto custody. Like I said, at the end, we're going to wrap everything up with a Q&A. So throughout the discussion, if you have any questions, any comments, anything on your mind, you can share them in the Q&A section or in the chat, and we will get to them at the end of the webinar. So I guess take it away, Carmi.
So first I want to make sure, can everybody see the presentation?
Yes.
Okay, great. So thank you very much. I'm very happy to be participating. The slide deck is going to be very, very short. And I think that we want to keep this as interactive as possible. This is just going to sort of set the stage for cryptocurrency and security. I'm glad that I could do that. So let's say you walk into a regular bank, not a cryptocurrency bank, and the nice bank manager sits in front of you and you say to him, "Where's the vault?" And he says, "Oh, I bought this really expensive wallet on Amazon and I keep all the money in the wallet. It's here in the back of the bank." And then you go to him and you say, "But I've got all my important identification papers. Where do you keep them?" And he says, "Oh, I keep them in the same place. I also keep them in cloud storage on Amazon. And to make sure that they're safe, I put a little yellow sticker on there that says, 'Don't touch.'" The odds are pretty high that you wouldn't put your money in that bank because you'd expect them to use a different solution than what you use. In other words, as a human being, putting your money in a wallet makes a lot of sense. And putting your papers in a file cabinet Also makes a lot of sense, but we expect more from banks. The interesting thing is that many of the cryptocurrency providers today, the word Amazon is not picked here by chance. They use Amazon Cloud Services for the storage of wallets, and they use cloud services for the storage of personal information. And these services are good. I'm not saying that they're not good for lots and lots of applications. They're excellent for many applications. But with regard to storing really valuable stuff, the security there is a little bit lacking. And we're going to now go to figure out exactly what the major issue is with cryptocurrency. So the first thing you might tell me is that cryptocurrency is based on blockchain, and blockchain is secure. And you'd be right, blockchain is secure. It is a static blockchain, has all of the digital signatures required to keep it secure. And as a static element, it is secure. The question is not the static blockchain, but getting things on there, performing transactions. So for me to take ownership or to buy a cryptocurrency, I need to use my private key and have that private key execute cryptographic functions in order to add the transaction that I am currently executing to the blockchain. And that's where the problem is. When, in many cases, when that private key is added, it is added using a generic computer, either in the cloud or not in the cloud. And during that period of time, it's exposed. And the interesting thing, or the scary thing about your private key, is if somebody has your private key, they can issue transactions on your behalf. The other thing that is interesting about digital currencies is that they must be approved. And so there's an approval process where your transaction goes through. But again, the question is, in which environment is that approval process taking place? Is it taking place in a secure environment, or is it taking place in a regular computer environment? And again, this is not to say that cloud environments are not secure. They're just not the most secure computers that you could possibly have. And so this is the state of how many blockchain operators add cryptocurrency and do cryptocurrency transactions. And this is what we would like to improve. And so Hub Security believes that when you want to do cryptocurrency applications, when you want to deal with cryptocurrency, you shouldn't do it using standard cloud technology. You should do it using a very secure foundation, which is something we've built. Just in general, if I talked about a safe at the beginning of the conversation, so you would measure a security by the safe by how thick the walls are in steel and how the combination lock works. With computers, there is a measure for security. It's called FIPS. And there are different levels of FIPS hardware, which as the number goes up, the level of security goes up. So we built a platform that actually complies with the highest level of security, which is called FIPS 140 level 4. And in our case, or when using our technology, the keys are always kept inside the secure enclave. The approvers who need to approve the transactions authenticate themselves to the system using a FIPS level 3 authentication device, and the policies themselves are enforced within the secure location. When you add things to the blockchain or change ownership of the blockchain, all of these computations are done within the secure enclave, and also logging of every action is done within the secure enclave. This includes smart contract executions, and all of those activities. And this is what it takes cryptocurrency, and not only does it keep it secure when it is static, but it actually takes the actions that add and remove things from the cryptocurrency blockchain and keeps them secure as well. So these are all the features of the platform that we've built. I'm not sure that they're very interesting at this moment, and I'd like to get over to the interactive part of the discussion. If you're interested in finding out more about our platform, please feel free to contact me or ask questions in the chat. And just one thing I wanted to bring over here is that I think it was 2 weeks ago, we recently announced that our technology has been pre-approved for a very high level of insurance by Marsh. And this is another reinforced message of why it would be beneficial for companies that offer cryptocurrency exchanges and to deal with cryptocurrencies to use a secure technology platform. Thank you very much.
Great. Thank you so much for that, Carmi. I think that was a really good introduction and a good way for us to segment into our discussion. I guess I will just jump right into it. And Milko, I wanted to ask you if you could tell us a bit about Maerki Baumann and why you decided to found a business to begin with, and where the idea came from, and what the needs were.
I mean, for those that don't know Maerki Baumann, it is a traditional Swiss private bank situated in the heart of Zurich, and we started this adventure in the crypto business really part of as a hazard by hazard, because in 2017 we evaluated the chances that we could develop from blockchain technology in general, but also from cryptocurrencies, and came to the conclusion this is way too early for us to start with. It's not regulated enough. But we issued some information to our clients and said we are happy to accept any fiat currency that you developed or made from speculations with cryptocurrencies, and then so we already had put in place a measure to check the origin of these cryptocurrencies, but didn't want to go further. And so we said, if you bring your dollars, euros, or Swiss francs to us, and it comes from crypto sources, fine with us. The problem was then our CEO, Dr. Zweilen, also mentioned this in an interview. This interview was in German, but was translated in the wrong way. And all of a sudden, we were a crypto bank that accepts crypto assets. So the little part with the fiat transfer was really omitted. And so we had to face hundreds of questions. Where can I open a wallet? What do we provide? Where can I get more information from you? And so in the end, we said, oh, we have to do something about it. There is demand out there. We don't understand everything by now, but there is definitely something, a need for banking in this area. And so we developed a strategy in winter 2018-19 together with partners of Strategy and came up with a approach that is more, it was purely demand driven. So what could we fulfill? What could we make at the current situation, and with that could meet the most demand in the market? And so we started basically with simple things like a fiat corporate account for companies that are active in crypto trading or blockchain technology in general. And so this made it for those companies, especially in Zurich and Zug and the crypto valley in Switzerland, easier to open accounts, to operate their business. They didn't have to go to banks in other countries just to have an account to pay their employees. And so this was actually the beginning of everything.
Yeah, very interesting. And I think that there's probably a number of banks who have similar stories to this, because as the market is expanding, traditional institutions are looking for ways to manage their custody, and also to be able to manage regulations and navigate the complexities of regulatory policies. So super important, super necessary right now. And what was your approach for developing the Maerki Baumann? What was your approach to developing the cryptocurrency and blockchain services that you now offer?
Yeah, we had to follow a twofold way. One was, of course, to touch on this, what you just mentioned, the regulatory side, to understand what is possible in Switzerland, what is possible in Liechtenstein and other countries, to gain an understanding what we can do from our side to validate every client, every transaction, understand better what the background of transactions in cryptocurrencies are, what pitfalls may exist, and what we may have to consider when accepting new clients. This was one first part, and we were very happy to have a couple of colleagues in compliance that were open-minded, that said, this is interesting, this is something new, this is something different. I'm skeptical, they have to be skeptical. Of course, it's a business, it's a job description of a compliance officer really to be skeptical and do not believe everything that you tell them. But in the end, we really came to convince them, and they made their own research, and together with them we found ways of how to make it possible for clients to open accounts on the one side, but also to make sure that the bank, which is, as I said, 80 years old, it's traditional, it is risk averse in its roots, really doesn't venture too far away from its basis, and so that we don't really take risks that we can't oversee. And so the first step was, as I mentioned, the opening corporate accounts for companies. Second step was also to offer this service to private persons, and we also dived to some extent into the ICO STO business, helped companies to start to collect assets for their projects and their ventures. And the second large step that we completed now in summertime was that we offer custody for some cryptocurrencies for our clients, so they can have a wallet with us. They can also buy and sell these currencies with us, and so we have now a service that meets the basic needs of a banking client. You can buy and sell every type of assets class from us and with us, and we're still looking into the market. What is the next step? What is the demand of it? We plan to offer advice as well to our clients. So recommend to them when is a good time to buy Ether, what is a good time to buy Bitcoin or Ripple, and also to provide a wealth management solution that is that could be an add-on, it could be an additional investment style, additional investment flavor to our existing traditional private banking clients, but also to institutional clients that bank with us.
Very interesting. And you touched on it briefly, but maybe you can expand a bit on the challenges that you guys faced when you were developing the services, the blockchain services that you guys now offer. I'm sure there were a few.
Yeah. I mean, the greatest challenge really was the insecurity with regard to regulation. So only in 2019, the Swiss Banking Association developed a guideline how to check transactions, how to make sure that you have all precautions taken to check the clients and also the transactions. The key word really here is AML, anti-money laundering requirements, and KYC, know your client, that these are the things that really are central to us to make sure that we do not onboard clients that have any connections to the darknet, for example. And this is a challenge also of trial and error, especially on the careful side. Better to reject a clean client, a client that is basically a good client. It could be a good client, but if we are not sure, we are cautious enough and careful enough to say better not to onboard a client that we don't understand, and that sounds a little bit, looks a bit transparent to us, than really taking the risk of onboarding an illegitimate client. This is the one side. The other side is also the technology, especially when it comes to custody and trading. This was something that really took quite a while, longer than we expected, for us to set up, because we wanted to an integrated solution that on the one side connects the blockchain technology, on the other side also links to our core banking system, a traditional system that is not that flexible as a new innovative software. So we had to do overcome some challenges there.
Definitely. I mean, recently there was talk of national regulators in EU countries passing some legislation that would require banks to stop using external technology services if their providers fail to fix the cybersecurity problems that were found during government inspections. So I think this is probably something that many in the financial world are grappling with now as they make the leap to crypto and to custody management. I guess my next question would be is how your employees and clients reacted to the decision in this shift to blockchain services.
It was twofold. On one side, a bit skeptical about the new technology. Does this mean a change? Does this mean anything for me personally? Especially the employees were unsure what was the challenge for them in their daily business. And on the other side, the client, especially the existing private clients, they asked if the bank would really go take any risk with this new kind of business. And especially for the clients, we could really rule out quite easily and early on that we will not take any business risk, any additional risk that we can't oversee, we can't really control. And so at the moment, I think the most of the existing clients are waiting and seeing what the development is. We see some skepticism, especially with the older clients and the conservative institutional clients, but in general it was positive. Many younger clients were really positive and said, "Oh, at last there's a bank that ventures to go into this area." And same with our colleagues. The older ones were more skeptical. The younger ones really enthusiastic and saying, "Okay, this is something very interesting. This is the future of finance, and if we do it in the right way, then we won't be one of those institutions that become obsolete and unnecessary. But we can find and define a new role for our bank in the new world of finance."
Yeah, definitely. And what was your approach to raising the level of expertise within the blockchain and digital asset space at the bank? I'm sure there was some learning curve there.
This is not easy, was not easy, especially when at that time when we started, there were not many experts in the market, and those that were experts, they were not very much in favor of banks as a partner for discussion. So it was a combination of selecting some interesting and experienced experts, some people from consultancies, but quite a lot was really by learning by doing, discussing, finding analogies between traditional business and new business. What is the difference between a crypto transaction between two people in comparison to a transaction on a cash side or on a security side? Is what can we use as analogies, and also discussing with other companies that were active in this market. The good thing in Switzerland really is of course there is competition for these clients in the crypto side, but also there's a good understanding that the ecosystem will grow only with a certain degree of cooperation. There is no point in keeping unnecessary secrets by our own. If I ask other companies, look, this is the question that is probably the same that you have. What is your solution to this? Being a security solution, a technical solution, or a regulatory solution, usually you find a kind of discussion. Nobody discloses its secrets, but at least it's something that you can, okay, maybe we got a new idea, a new approach for a problem, and we can think of this as well. So it's a learning by doing as well. The key thing that we saw is it's really necessary that you try it out. And we learned so many things with each and every new client that we found. And every client has a different setup, a different need for banking, and a different need for security in his holdings that he wants to store with us.
Interesting. And so what would you say your key takeaways were from all of this experience that you've gained from bringing the blockchain services to the bank and hand-holding clients? And
well, there are several key takeaways. The first thing is without there is no strategy, no implementation without the sign-off and the agreement with of the supervisory bodies, the board of directors, and the EXP. They were very supportive to us and very helpful to give us leeway to really experiment and to some extent, but also give clear direction where to head on. And I think we did a good job in taking with us all employees. Really, no matter what job they had, we all invited them to sessions, learning sessions for what is blockchain, what are cryptocurrencies, how does the security work, how do we do trades, how do we do custody. So to tell them, you're not excluded just because you are not affected by this on a daily basis, because we believe this blockchain technology will change our world entirely, and it may be interesting to many of our employees, although they don't work with our clients directly, but they get a basic understanding what's all about these cryptocurrencies and security token and the like.
And would you say that crypto assets belong in the portfolios of specific types of investors? This is part of also the internal education you do among employees.
I think for most of our clients or most of investors, it will have a positive effect if you include some crypto assets in your portfolio. The question really is, what do you want to invest in and what the targets are? But basically, most people really invest in the top 5 or top 10 cryptocurrencies, expecting them to increase in value. So with a limited amount of money, let's say 1 to 5% of its assets, a client may be willing to try this out and invest into this. In similar way as some people invest in precious metals or in commodities or in foreign exchange transactions. And so this is something that we advise or will advise to say, you may invest, try it out, see what works, what doesn't work for you, how much understanding you need to have for the underlying cryptocurrency, for the project, or maybe this is not your not your taste of investments. You don't want to invest in cryptocurrencies. You prefer to invest in security token of a company as a kind of venture capital investor. And this is a different approach. And especially for the latter one, we are a little bit hesitant at the moment still really to advise this to everybody, because it's basically the very same situation, the very same asset as in the traditional world. We wouldn't recommend to a conservative client to invest in a startup company because this would be too much risk put on one horse. And so we would say, okay, maybe a fund or something like that. So this is there are various options to to invest in this area and to participate in this in the new technology. And then I didn't even start with new developments like DeFi and staking that are still on the horizon and still gaining ground. So this is still quite a lot of to explore and to learn in this area.
Thank you. And touching on that mention of risk, how secure would you say, or how do you guys approach cybersecurity, and how do you ensure the protection of client assets? I mean, maybe you can give us a few details on maybe some of the things you've learned in terms of creating the technical setup that's required for handling investors like these.
Yeah, sure. I mean, the whole technological setup and the whole processes that we use for protecting clients' assets, we had to discuss and with FINMA, our Swiss regulator, and also needed to the sign off from them, so that is secure enough for clients to put money or crypto money with us. So basically, we have security on the procedural side. We have a sign-off process that is split between us, Maerki Baumann, and our partner, Bank that is doing part of this. So we basically need the sign-off of 2 people here, plus 2 people at another bank that are situated in another location. And this sign-off works outside the blockchain technology. So it's basically based in our traditional banking software. And then the 2 people in Bank have to do the sign-off for any transactions at the moment still, and even for very low amounts, for any transfer going in and out. And the private keys are not known for us here in Maerki Baumann. We don't know them. We don't even know the wallet addresses, and we can't share them with our clients. Our clients don't know their wallet addresses either. We have specific transfer wallets that are used for incoming and outgoing transactions and for trading. And any transfer requires, as you know, a private key, and these private keys are protected in HSM, in hardware security modules, so that nobody can really access them on its own. But you always need 2 out of 3 or 3 out of 4 signatories to access the key in theory, but you don't get it displayed or shown, but it's only a sign-off for the transactions. So we believe it's quite a secure environment that we have, and hope that this is something that is convincing to our clients as well.
And before I jump into Q&A, because we have a lot of questions coming in from our audience, I have one last question for you, which is, where do you see the price of Bitcoin going by the end of 2020?
That's a classic question. Well, good thing is that it's already October, so it's not too far ago. But I'd say it's roughly 12,500, I would say, by the end of the year. So I still believe a little bit in the growth, and still more bullish on the development of this key currency.
Great, thank you for that insight. I'm sure it was on the minds of many people here. We have many questions, and we don't have a lot of time remaining, so I guess I'm just going to jump right into them. We have questions here for both you, Milko, and for Carmi. If you, the audience, have a question, you can share it in the Q&A section, and also would be helpful if you can define who your question is outlined for, and we can get to them quite quickly. So our first question from an anonymous attendee is, for mass adoption to take place, should institutions trust retail with their private keys, or must the solution lie with multi-signature and secure custodians, limits on transactions, and safekeeping? Is this understandable?
You want me to address that, or Milko, would you like to go?
You missed on.
Yeah, so I guess that was part of the topic that I wanted to sort of cover in my presentation, and then related to what Milko said. So the process is very clear. There are keys, and they're used. Normally, the keys are stored in what you would call a HSM, a hardware secure module, and then they're used for executing transactions. And then, as Milko also pointed out, you have 4 out of 5, 3 out of 4 people that need to approve transactions, and these approval processes need to happen. The next question, in my view, is where do those activities take place? In other words, when you use the keys to put them through a computer code to actually do the signature that puts the new transaction as part of the blockchain, is that code running in a secure location, in a vault, inside an HSM, or is it running outside of an HSM? And in general, the more secure you can make the execution of the blockchain, the better off you'll be. And again, it could be 9 times out of 10, or even 90 times out of 100, executing in a cloud environment would be secure. That's not the question. The question is the one time that it isn't, because digital currencies are, in my view, I like to compare them to bearer bonds. In most cases, the minute the transaction takes place, the money's gone. You can't afford to have your key gone for once, because then it's gone. Right. And so the same is true for the approval process. The people approving, will do the approval process. Normally this is done not on paper, it's normally done on a computer. And then the question is, the computer system that process is being done on, is it secure or not? I was very happy to hear that by Milko, these are done in the bank. Hopefully they haven't transitioned over to the cloud yet, which is something a lot of people are doing. But people that transition over to the cloud, and companies that go to the cloud, tend to sacrifice security for execution, for secure execution. And so I would say that in order for digital coinage and cryptocurrencies to be as commonplace as money, the transactions need to be executed with the same security that you get with regular money. And and even more so because of the exposure that a person has with their keys, which are not necessarily involved in traditional transactions with banks. I guess that's my answer to that. Anything else to add there?
Just one small adding, especially for those clients that are not really familiar with using these private keys and these wallets. We want to build a bridge, and so we took away all this hazard and this insecurity and this new thing away from them, and so they can use, for example, our traditional e-banking, our normal e-banking system to transfer assets and to place orders for crypto assets, and they don't have to bother for private keys. It's taken away from them in a secure area, and in addition to the pure wallet security that you get again from private keys and non-publicized wallet addresses, you also get the security that you usually have in traditional e-banking. And so we wanted to give them more security, a two-layer system, but also giving some more comfort and more ease of use than for some people that are not experienced with these kind of wallets, so they can rely on more traditional or more easy to use facilities.
Thank you both. We have another question here from Daniel, and for Milko. Coming from the private banking sector, how do you see DeFi affecting your business? And is there a business opportunity for private banks to participate as well?
Where's the? I didn't get the question. What question is that?
You can share it in
I have the Q&A up. I just can't see it.
Coming from the private banking sector, this is a question for Milko. So coming from the private banking sector, how do you see DeFi affecting your business? And is there a business opportunity for private banks to participate as well?
Yes, definitely. I mean, private banking has some shortcomings at the moment because the investment universe is limited to most banks. You either invest in shares, in equities, bonds, and maybe some precious metals. But most of the clients are offering a new asset class that is different from the other ones. It doesn't walk in the same direction as equities or bonds. This is something that has definitely a business opportunity with regard to investments. And the other side also, what we see as a very much shortcoming of the current market is there is nobody really advising clients what to do. You got lots of blogs and news and information that is all fine and all gossip, but in the end, nobody answers the question, what should I do in a qualified way? There are many ideas, but nobody really says you should do this because of that, and especially doesn't link it to the traditional assets. And you have to, in our conviction, you always have to see both sides of the traditional assets and the crypto assets as one investment and one universe that has to be considered as an acceptable risk to the client. And this is definitely something that private banks can do, but they have to learn how to understand crypto assets.
Definitely, thank you. Another one from Milko here. From Alexander, hello, thank you for the presentation. Was difficult to reach the understanding and understanding with FINMA with respect to the new crypto-related business activity.
Yes, the FINMA is the regulator for banks in Switzerland, and as a traditional bank, we are already regulated under FINMA with FINMA and are allowed to do any banking business that we want to do. However, crypto assets is definitely a new asset class, definitely a new way of doing business, both on the assets side, but also on the technological side. And so we had to go to FINMA and have a sign off from them to say, are we allowed to do this? Is this what we do? How the way we do it, and the way we want to do it in accordance with your rules, your understanding. Basically, it was not it had to be a kind of formal application for extension or amendment to our regulation. However, I have to say that FINMA was really cooperative and supportive, and by now they also know what the questions they have to ask, and so this was really a very positive experience to us. That we saw they understand the business by now. They don't ask any silly questions that show they don't understand the business or the technology. but it was more on the details. More how do you do your authentication? Who has the private keys? Does every client have his own wallet? So it really was in-depth questions and not in general, why the hell do you want to do this? And this was really a good experience to us.
Yeah, great. I'm sure it's not as easy maybe in other countries.
That's right. It's more expensive and takes longer than in Estonia, for example.
Oh, we have so many questions here, so I'm going to try to get through them as quick as we can. So this is a question for both of you. What do you see as a possible tipping point for more institutional money flow into the crypto market? Seeing more regulations have taken place, one could have expected to see more movement. Is it an issue of the lack of security and insurances?
Well, there are two things. One thing is the institutional clients usually would want to have both. You want to have a reliable partner for custody that it's really safe to keep their assets. They want to have a regulated partner that they can show to their external auditors or to their supervisory boards. Look, we are working with established companies. They know what to do. They are risk averse and the like. So we are quite concerned that we are convinced that we do a good step in that direction to offer this service to our institutional clients. However, especially insurance companies, pension plans, pension funds, and they are often very much regulated and restricted in the assets that they are allowed to invest in. So if there is, if they have a really a governance that says you are allowed to invest in equities, bonds, and no foreign currency, and only 5% in precious metals, then you can't invest in crypto assets. So they have to and understand that this is something that's of interest, and that they can gain an additional return for their clients and their holders. Then I think this will change.
Carmi, you have anything to add to that? Because I have a question for you.
I think we should go to the next question.
Okay, yeah, so we have many here. As a newbie in programming, what are the security applications of Hub Security's HSM built on? Could you see them as the apps built on an existing network, or is it outside of the ecosystem?
Well, no, Hub Security's hardware and software, it's a platform, is definitely part of the ecosystem. What it does differently than the rest of the ecosystem is the executional environment of where things take place. Let's just understand some basics. All digital cryptocurrency or all digital coins or digital transactions happen in computers, okay? A CPU adds a few things together. A CPU takes a secret, does some multiplications with it, does a few signatures, and puts some data back on a chain. The question is, where is that CPU, and is that CPU in a secure environment? And Hub Security has created an ultra secure environment. And again, we don't say it's secure, it's actually evaluated by NIST, which is an organization that evaluates security and creates different levels of computer execution. In my view, it's like, I started at the beginning. I think when digital currency started happening, people were looking only at the static digital currency, looking at the ledger. And the ledger itself is secure, put aside attacks by quantum computers and RSA falling out the window, put that aside for now. As long as digital signatures that we know of are secure, a static, decentralized ledger of Bitcoin or blockchain is secure. That's not the question. That's not what we address. We address the data in use, putting things on and taking things off that blockchain or adding them. And that is when digital currency is vulnerable. And that's what Hub Security adds. It adds a very secure environment. I just want to add, there's a question here, is there insurance in place for crypto? So the question for the insurance is actually, where is the actions being taken place? Where is this happening? And if they're not happening in a secure environment that can be evaluated by the insurance provider, you don't get insurance. And if they can be evaluated by, if this technology can be evaluated by the insurance provider, you can be evaluated. We announced 2 weeks ago that Marsh was actually pre-approved custody and storage using our technology for very large sums of insurance, just because the execution is done in a secure environment. So the question, so that is where the answer to the insurance is, it's what happens. And the only thing I wanted to add in addition is, we recently saw that, I think that Mikko's bank is a pioneer. And within the last few months, US banks are now allowed to do digital custody. And as the banking institutions and existing financial institutions move more into the mainstream finance moves into cryptocurrencies, you're going to see a growth in the market. That's one of the growth questions, because it won't be done by people we don't trust. I like to tell people that the key element, I'm originally an American, and the key element with any currency is written on the dollar bill. It says, "In God we trust." And the key word is trust. Now, when you're dealing with a currency, you trust the country, and you trust its central bank, and you trust its banking institutions. When it's a cryptocurrency, you need to trust the technology, okay? The technology that is managing this cryptocurrency is what you need to trust. And the institutions that are running the services using this technology are what you need to trust. And as you increase trust with technology and serious service providers, you will see a growth in the use of the money. It's the same, you know, and that's been the growth in the use of money since King started creating coins out of gold. There's nothing new here. Trust from technology and service providers will create the growth.
Thank you, Carmi. Milko, we have another question for you here. What is the biggest challenge you face with acquiring clients due to the decentralized nature of crypto? I would imagine an anti-custody movement taking place.
To some extent, this is true, especially those people that are experienced in blockchain technology, that have followed this development for a couple of years now, and do know the technologies by themselves. It is very difficult really to convince them that it makes sense to really trust a bank and to give up your private keys on the wallet. I mean, we have more than once we heard in a discussion, it's not your keys, not your money, and this is the conviction of many of those that come from this technology background, and they know the not necessary trust that you have and that you buy when you use blockchain technology. It is fine to us. I mean, we accept this as an approach, the same way as we accept that some of our clients have some of their money or gold in a vault at home. It may be as safe as it can be. One thing that is really is the one topic that we really recommend them when we can't convince them to bank with us is think about your heirs. Think about what happens to your wealth, to your assets, if you will not be capable of entering the private key anymore. Is there anybody who knows it? Do you trust anybody strong enough to provide him or her with your private keys? So this is something that I think where a third party like a bank can be of help, that we can make sure that in case of death or inability, we can make sure that the wealth can be passed on to the heirs. And apart from that, the other challenge is more from the other side. Just briefly, for traditional clients, it is it's a challenge really to make them understand the nature of cryptocurrencies and what what the advantages are. This is a constant training and information task that we see on our side as well.
Great, thank you. And I just shared some contact information. Some of you were asking how to get in touch with Milko and to learn more about the services they offer. So I've included them in the chat below. We don't have so much time left, so I'd like to just get through a few more questions and we can wrap things up. But thank you, everyone who's joined us today. You've been a really engaged audience, and we're super grateful for the questions you've been asking. We have a question here from Eric. Hello, Milko. Are cryptocurrencies a real class of assets, part of your client offering? Or are you mostly following clients buying orders to acquire cryptocurrencies?
At the moment, we're still working on a comprehensive overview of all asset classes that includes also crypto assets. At the moment, not yet, but by the end of the year, we are confident that we are there, that we can say for this kind of risk appetite of a client, we recommend to have such an amount of crypto assets. And of course, it's always a question of personal conviction of our clients if they want to invest in this. But basically, yes, we want to. We believe that it's an asset class that's here to stay, and that will develop and that will grow. And we're quite confident that this is the way forward for us.
Great, thank you. I have another question here for you, Milko, and then I have one more for you, Carmi, and we'll wrap things up. Thanks, Carmi and Milko, for your insightful presentations and enthusiasm. Milko, you mentioned DeFi, and to your opinion, how disruptive DeFi is going to.
Shterny? I think we lost Shterny. Hello? Milko, can you hear me?
I can hear you, yes.
Yeah, so I think Shterny is locked up. Hopefully she'll join in for the rest.
There he is.
Are you back, Shterny?
Yeah, and I think we had a glitch for a minute. Milko, did you see the question? Did you understand the question?
Yes, I understand the question. Yeah, I mean, DeFi is definitely. It's a difficult topic because there are various interpretations of what DeFi really comprises and what not. But I'd say there's a question of what is the regulatory background. Is there or can we regulate this in especially in a case where you say it's decentralized by default, and so the question remains which law is applicable, etc. And this sounds boring, especially for techies, but it's something that is essential for the majority of investors to have a good understanding of what risk do I take, who can I sue if something goes wrong. This is basically the first question that comes, and as long as we can't answer this question, who is responsible if anything goes wrong, and who can I ask to hit those people that did mess things up. Until then, DeFi is something that we consider as interesting, yes, but we're still a little bit hesitant to go into this with full speed, because it is not clear yet in what direction it goes. And the regulators are not there yet, in my opinion, neither in Switzerland nor in the EU or in the US. They are busy with currencies in general and sovereign cryptocurrencies, and so I think we will see the first rules in next year, maybe on DeFi, depending on the speed and the agility of the regulators.
Great, thank you. And I have the last one for Carmi, but I think we answered this more or less already in our discussion, which is what advantages does Hub Securities security applications in association with the custody have over a personal hardware wallet? And do your security measures also offer insurance? And we've answered this already, part of the question at least, yes.
Yeah, we do offer insurance, and over personal wallets, it's sort of like comparing a Fiat 600 to a Ferrari. Okay. Yes, they're both cars, but that's about it, you know. So, and we're not the Fiat 600, in case that wasn't clear. I have nothing against driving in a Fiat 600 in town. I think it's a great little car. But if you're looking for something to get the job done faster, and maybe the Ferrari example wasn't good when I was talking about security or safety, but we have a very safe Ferrari. So it drives fast, but it's also very safe. So that, I mean, you know, that's basically what that's the tool we build. And we'd love to, not only to Daniel, but to anybody who participated. Obviously, you can't really describe technology in depth during a conference call like this. So if you're interested in more, you can contact us and we'll be happy to provide a lot more in-depth information as to why, you know, what this technology does.
Great, and Jeff, one of our participants, added the Fiat 600 versus Mercedes S-Class.
Yeah.
Great, cars are not my my hobby, so I think that is a good segue for us to wrap up our talk today. Thank you everyone for joining us, and thank you to our speakers, Carmi, Bogot, and Milko Hensel. And we hope you're all staying safe and healthy at home. And we look forward to hosting many more discussions like these. But thank you so much, Milko, for joining us today.
Thank you.
You're welcome.
More about Maerki Baumann, you can find them on LinkedIn. I've also shared some of their contact information below in the chat. And if you'd like to learn more about hub security, you can find them on LinkedIn or on Twitter. And you can also check out their weekly digest on Medium for the latest stories coming out of the blockchain and cryptosphere, curated by me. And so thank you everyone so much for joining us. And if you'd like, this webinar was recorded and will be shared on YouTube, and you can share it with some other people if you think they might find this relevant and interesting as well. But I think that's it for today. Thank you so much.
Bye-bye.
Goodbye.